You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 25th day of September, 2019. Thanks so much for tuning in, whoever you are, wherever you are. We're just glad to have you right here, right now. I'm going to put up a chart of the S&P 500 Emini Futures. In fact, we'll leave it there for a moment. We'll go to the daily chart in a minute. If you can't see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. Now, on the days you're out of the office, away from the desktop, point a browser, any internet-connected browser, to youtube.com/CFRN/live. There you will find a live real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. All right. Also, let me just mention, if you've missed any of the daily broadcast over the last few years, you can also go to youtube.com/CFRN, and there you'll find an archived recording of each and every broadcast going all the way back to, you ready for this? I don't know. Honestly, I don't. There's a lot of them, years. I'll do that though, now that I think of it. I'll scroll all the way to the end and find out, because we used to do just an audio broadcast. No video, no charts. Well, let me take that back. Well, first, yes, in the early days, 2005, 2006, when it was me and Mike B and Mike Reed from Trade Stalker, we did do an audio version only of the show. Then, as technology improved, we began to do audio and video. But at that point, we were still only uploading the audio portion as a podcast to Apple's iTunes and all the other place you listen to the great shows, all the great podcasts. Then we started, and again, I don't remember the year. Let's see, this is 2019. I think maybe 2012, 13, 14, somewhere in there. But I'll find out. But anyway, there's years of daily radio broadcast archives. And so the things that you see us do today, as we go through and recap the market, Michael comes, he does a recap of what happened in the live training room, and I walk you through the Concierge Trade Alerts that were issued last night to all CFRN partners and passport holders. I can tell you that 59 weeks ago, we started adding a recap of the Logic 247 alerts, because that's when they were born. It's a spinoff of the Concierge Trade Alerts. Now, your favorite TV shows, they do spinoffs. And give you an example, Archie Bunker, the first spinoff, there was a couple spinoffs from that show. You know, that's back when people could say stuff they were really thinking, and everybody had a good hearty laugh. No one took offense. Do you remember the days of Archie Bunker? Now, I'm not promoting racism in any kind of way, but Archie Bunker used to call it the way he saw it, the way a lot of people see it. And people of color enjoyed that show so much, it created a spinoff with George Jefferson. Moving on up, ran the dry cleaner, doing very well for himself. There was another spinoff from that show too, Edith's sister, Maud. Remember Maud? So, yeah, I don't know why everybody's got their... yeah, I don't know. What happened? I don't know. Anyway, back to what's real, right here, right now. Let me point out, on this sell-off that we had yesterday, and I covered this yesterday during the show, we had a Concierge Trade Alert and a Logic 247 alert at $29.91. Now, it's often that they come out, just a couple points difference. Sometimes they come out spot on. Now, a Concierge Trade Alert, which is based on previous price behavior, that alone is sufficient for, a decent trade. Logic 247 alone, again, perfectly fine for a good trade. It's when you have the two, one which is evaluating previous price behavior, and the one that is analyzing current. You got previous and current price behavior. When you got both of those pointing at the same number or even the same area, it deserves a second look. In fact, if a person wanted to, they could probably launch a career that says, you know what, I'm only going to trade the alerts that pop up on Logic and Concierge. You could do that. Are there enough of those in the course of a week that you would have sufficient inventory or ammunition? Yeah, I think so. I'm not suggesting you do that. I'm just pointing it out as one of the infinite number of possibilities that the market provides us with each and every day. So we talked about the sell-off yesterday from 29.91 down. Now these are all this week's weekly trading zones. I was in the process of switching them over. I don't normally do it till Thursday, but yeah, we had a lot going on this week, so I thought I would go ahead. I got the S&P updated. I think that's the only one I've updated so far, so we may update some of them as the show progresses today. So big sell-off, 30-point drop, and then we hit this zone, which is highlighted in green from yesterday to separate it from last week's Concierge alerts. Now the alerts, they go out to the partners and passport holders Monday morning, 6:15 a.m. Eastern. And we've been publishing these zones since December 14th of 2009. We're coming up, hard to even imagine, but we're coming up on a 10-year anniversary of the Concierge, of the weekly trading zones, the WTZ, okay? So Monday morning at 6:15, all members of the immediate CFRN family, passport holders, partners, had these numbers, the ones you see on the screen, okay? Sunday was the 22nd, Monday morning was the 23rd. So price comes down, doesn't quite make it to this zone. Buyers come in, they run it right up to the zone overhead, where we get consolidation. Remember, only three things happen at a weekly trading zone. When price encounters a weekly zone, one of three things, the most likely, the one you see over and over, the one you anticipate every time price gets to a zone, is this: consolidation. 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 But these are 30-minute candles. So when you see even even if you see one 30-minute candle that spends most of its lifespan at a zone, if you break that down into 5-minute candles, the switch from a 30 to a 5-minute, I did this last week to show you, and you'll see a whole bunch of little 5-minute candles. Well, I don't know about a whole bunch, you'll see 6. One 30-minute candle contains 6 5-minute candles. So you get the idea of the consolidation. So that's the most likely thing. Well, what's next? Second most likely is rejection. Okay, here's a good example of rejection. Sunday night, the Lobex open, we gapped higher on the open, and we ran up to the zone at 3007/3008. Price touched the zone and then immediately retreated. Think of a stove, any stove. You walk into the room, there's a stove. You walk over to said stove. You place your hand upon the stove. Stove is hot. You snatch your hand back. That's the visual I get, right? Rejection. You could think of your high school dance. Maybe that's where you see rejection. However you play it, rejection. The slice, okay, so number 1, consolidation. Number 2, rejection. And number 3, the slice. That's when price on our 30-minute chart slices through a weekly zone like it wasn't even there. Like that. Okay, so then what? After the slice, when the move runs out of steam, like it did here, we anticipate a retracement back to the zone that we sliced through. If we slice down, then we're going to pull up to the zone we sliced through, because you see it failed to be good support, so we need to know if it's going to be good resistance. It was. In fact, so good it was rejected, which sent it back down to the zone below, where it was rejected and sent back up to the zone overhead, where it was rejected which sent it back down to the zone below, where it consolidated and gave us a very beautiful candlestick pattern to work with. And that sent it back up to the zone, but wait for it. This is the 9:30 opening candle today, the 25th. So there's 9 to 9:30. Here's 9:30 to 10. Okay, so we opened right here. The market attempted to continue the move higher, but there's a lot going on in the first 30 minutes. Those who are passport holders know that during the opening 30 minutes on Wall Street, I don't put out any alerts because everybody's kind of jockeying for position. Now, that's not a rule, it's just a personal preference. Michael, on the other hand, in the live training room, he hits the ground running, bang, right at 9:30. So again, you can choose whatever works best for you. It's a personal preference. So I stay away from the first 30 minutes just because of this kind of thing. It happens. So it sent us back down to the zone where we were. This is a bit of an odd rejection, in fact, because of the fact that, see, we spiked it, but the body of the candle never touched the zone, and that sent us back up to the zone overhead where we were once again rejected. That's a lot of rejection. I guess, sometimes rejection can be a good thing. Now, the distance between 61 and 79, that's 18. Alexa, good morning.
Good morning. And look, up in the sky, it's a bird, it's a plane, it's National Comic Book Day. Evildoers beware, 'cause I've been working on my 1-2 punch. Kapow! Whammo! If you want some more heroics, say pretend you're a superhero and get ready for some action-packed fun.
Alexa, pretend you're a superhero.
All right, I see a baby kitten fall into the water, splash. I jump in to save it, but the water is freezing cold like yowzer. So I decide it's better to use my superpowers, zing, and poof, we're back to safety. Meow.
Alexa, you're so awesome.
Thanks.
Okay, you ready to go to work? Do this for me.
I'm not quite sure how to help you with that.
Okay, well, I'm going to tell you. Alexa, what's 18 times 50?
18 times 50 is 900.
Okay, 900. Thank you very much. Okay, so what we have here, $900 per contract traded. Of course, for a trader who's earned the right to trade 10 contracts, that would be a $9,000 move, but you got to earn the right. At least that's how we see it. In fact, we believe you need to earn the right to go live. There's lots of arguments about that, but we stand firm. We have for years, and we're not going to change. You earn the right to go live. Otherwise, it's gambling. And then you earn the right to add a second contract, and then a third, and then a fourth, and so on. But anyway, one contract, zone to zone, $900. I should clarify that. Zone to zone. Do we have traders that just trade zone to zone? Yeah, it's a true story. Zone to zone, $900 per contract traded. Now, if it only did it once, that'd be awesome, right? I'll take that any day, please. But the market was incredibly kind today and yesterday. $900 drop, $900 rally, $900 drop, $900 rally, $900 drop, $900 rally. So what do we got? We got 1, 2, 3, 4, 5, 6. 9 times 6 is 54. So that's $5,000 $400 per contract traded. It's 50 grand, right? Okay, but let's be realistic. What's the chance? What's the likelihood that you're going to sell this zone on the nose, take profit on the nose, stop and reverse as they call it, stop and reverse, slim to none, okay? But did it happen? Yeah. Was there anything to prevent you from doing what I just said? No. Is it how we teach you to trade this market? Indirectly, yes, because what do I always say about this time every day when I'm talking about price and the weekly trading zones? Simply this. From Sunday evening at 6 p.m. Eastern until Friday afternoon at 5 p.m. Eastern, price is always trying to get to a weekly trading zone. Sometimes it fails in its attempt, and it may have to go back and start over, and go back and start over. Doesn't change the fact that it's trying to get to a zone, either the one overhead or the one below. Part of what we teach you is how to recognize, how to discern which zone price is currently trying to get to. Trading's not easy. But this makes it simple once you understand the concept and the principle upon which markets operate. And that's something else that we teach you. If you're not a CFRN passport holder and you're struggling with your trading, things just haven't panned out the way you thought. Maybe you've got a couple of blown up accounts in your wake. Don't be overly concerned. Be concerned, but not overly concerned, because it happens to everybody. Everybody? Yeah, pretty much. Why? Well, it's pretty simple. If you walked out of your house today and got into the cockpit of a little Cessna and, tried to fly across town, there's a high probability you'd crash and burn unless someone had taught you how to fly an airplane. If you try to fix your own plumbing, you might blow up your house because nobody ever taught you how to be a plumber. Water pressure and all these different things that you have to know, right? So when I say don't be overly concerned that you may have failed miserably so far at this thing called trading, well, ease up on yourself. Don't cast judgment until after somebody teaches you how to trade, and then you attempt to implement that, all right? And even if you fail at that point, there's a thing called one-on-one mentoring and coaching, where when you have a trade that doesn't turn out the way you expected, or a day or a week, instead of sitting there silently, alone, banging your head on the desk, you can pick up the phone and call for help. It's that simple. Trading's not easy, but it can be that simple. All right, let's take a look at the numbers from around the world. I got little bits of news for you. I got 3 pieces I think you'll like, but we're going to get a recap from Michael first. Let me just give you the numbers. These are the cash markets. We'll start here in the U.S. with the Dow. The Dow is currently up 160 points. NASDAQ is up 29. S&P 500 is up 8. And the Russell 2000 also up 8. In the commodity basket, we had crude inventories today. Crude oil down at $1.16, trading 56.13 last. That's a drop of 2%. Gold. Oh, gold. I guess it needed a break. Down $27.20, trading 15.13 last. That's a drop of 1.75%. In the Asian markets at the close, the Nikkei was down 78 points. Shanghai was down 29. The Hang Seng was down 335. For the Shanghai, that's a drop of 1%. For the Hang Seng, it's a drop of 1.25%. In the European markets at the close, FTSE down 1.5 points. DAX down 72, and the CAC down 44. So no movers and no shakers in the European markets. So for the day, it was a red day in Asia. It was a red day in the UK. So far, it is a big green Radio Wednesday here in the US of A. Let's go to Michael, get a recap of what happened this morning in the live training room. When I come back, we'll talk Concierge Trade Alerts, we'll talk Logic 247 alerts, we'll talk to John, and we'll talk about anything you want to talk about. Just put your questions in the chat box.
All right.
It's all yours. I'll hit mute. Take it away.
Okay.
All right.
I got it. All right. Good afternoon, everyone. Today is it's Wednesday, the 25th day of September 2019. Sorry I couldn't be with you yesterday. I would much rather have been with you yesterday than what I had to do. But anyway, if you have not taken a free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial. Apply.cfrn.net. If you click on that, you'll be brought to this page, where all we ask for is your name, your email, and your phone number. And you have the option of telling us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and then you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the link, we don't know that you took the free trial. So you got to click that link. All right, now hang on, let me scroll up here. There we go. John B. I see you're in the audience. I don't know if you're listening, but we got to schedule a time. Hey, that's funny. Joan is right above you. Joan and John B. Both of you guys and Luigi. We got to schedule meetings. Well, Joan, we already scheduled one for tomorrow. Okay. So what I was saying is you got to click that link. Okay. Recap today. Gold was our nemesis today. But if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 25th day of September 2019. We made 17 ticks in the euro, 6 ticks in crude. We lost 16 ticks in gold, and we made 8 ticks on the ES. So that put us at plus 106.25 on the morning session. Now, we had a bunch of trades this morning. Today, it took 21 minutes and 3 trades to get to the goal for the day. At that point, we were up $100 per contract, and we took a total of 14 trades this morning. On the month now, we're at $3,201. That's over 16 days, averaging $200 per day. Nice, even $200. On the year, we are now at $27,968. That's over 172 days, averaging $162 per day. Again, these are gross numbers, and that's one contract for 2 hours. One contract for 2 hours. Mark, are you out there? Let me just, yeah, it says you are. Okay. I'm back. I know you were concerned about my absence yesterday. All right. So let's get into what actually happened and what we did and didn't do. Look at all those drawing objects. I usually erase all the drawing objects on Mondays. Yeah, September 25th. That is correct. Okay. So on the gold, we missed this long trade right here. Well, hang on, let's go all the way back. We missed a long trade right there. That would have been a break even. We missed a long trade right here. That would have been a break even. We got stopped out pretty much to the tick on this one. Then we got stopped out pretty thoroughly on this one. And we missed a short trade right there. So at this point, we're minus 16 on gold. We got into a break-even trade right here. And wait for my charts to catch up. And let's see. 1054. There was a shorting opportunity right there that we didn't get into. A long here that we missed, a long here that we missed, and another break even right there. Let's see, during the break. There was a shorting opportunity right here. During the break, that would have been profitable. It looks like another one right here that would have been profitable. Another one right here that would have been profitable. Another one right here that would have been profitable. And then we change directions and we start going the other way. There would have been a long trade right here that would have been a break even. A long trade right here that would have been profitable. And that brings us to now, where we don't have anything. We would have had a shorting opportunity right here that would have been break even. Okay, but that's it for the gold. There's a lot of movement on gold today. We had, I think we had 4 trades that we actually did, and there were probably at least 4 more that we missed. Okay, now the euro, we traded the euro today, oddly. Come on, charts. Come on. Okay. I'm back in the saddle today, Mark. All right, on the euro, the first trade we took right here was +1. Then this was +16. Put us at +17 on the morning session. And that was pretty much all there was for the euro. Okay, so compared to gold, the euro was just, well, it gave us opportunity, but it just died out at the end of the morning session. All right, in crude oil, we started out right here with 1 tick. Then we had a whole bunch of break-even trades, but there was a trade there and a trade there that we missed, and a trade here that we missed. Now, both of those first 2 would have been profitable. This would have been a break-even. Then we grabbed a break-even here, +5 there to put us at +6, and another break-even there. During the break, nothing. Now I'm just looking at the slingshot down here, the cycle in the slingshot during the break, and there was just no opportunity at all. All right, on the ES, what do we do? The first couple of trades this morning. We're on the ES. Yeah. Here we started out with a break even. Nope. Yeah, we started out with a break even, then we had a +1, then we had a +7. Then it got hung up in the zone. There was a long trade here that we didn't get filled on. Then a break even right there. And I'm trying to scroll right now. My charts have to catch up. Yeah, then during the break, see, I'm just looking at the cycle again in the slingshot. And we weren't trending right here, so we wouldn't have done anything with that. And that was it. That was a whole morning session. All right. Here we go. Again, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 25th day of September, 2019. Today we made 17 ticks in the euro, 6 ticks in crude, and we lost 16 ticks in gold. Made 8 ticks on the ES to put us at +106.25. Today it took 21 minutes and 3 trades to get the goal for the day. At that point, we're up $100 a contract, and we took a total of 14 trades today. So on the month now, we're at $3,201. That's over 16 days, averaging $200 per day. On the year, we're at $27,968. That's over 172 days, averaging $162 per day. Okay. Yeah, and that's it. With that, let me bring this up. Hang on, back up here. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. And in the right-hand column, it says 5-day free trial. Apply.CFRN.net. Click on that, and you'll be brought to this page, where all we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge, so you can tailor one-on-one training specifically for you. And hit the send button. Once you do that, you'll be sent a confirmation link. Okay? Just click on that confirmation link, and we will send you all the information that you need to get into the live training room in the morning. Okay? All right. And with that, we can pass it back out to fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready. Let me grab the chart.
John's not out there yet.
Okay. There we go. All right.
Okay.
Recap of the
I can
recap.
see your trades. Today it took 21 minutes and 3 trades to get to $100 per contract.
And that's a good bingo.
Yes.
Somebody asked yesterday or day before if there was a way they could listen to the daily radio show live without having to stream over YouTube, because there were some bandwidth issues, and of course streaming video does eat up some bandwidth. So I'm going to put a link here in the chat box. See, there's a question. Did you already? Oh, no, that was a comment. Okay.
That was a comment, yeah.
Okay, so in the chat box, I'm going to put a link. Send to all, and then I'll put it in the other little box, the one you can click it and bookmark it. There we go. Now, what that does is that takes you to the TuneIn radio app. And I think you can stream straight from TuneIn, or you can use the app. I have the app. It's free. You do listen to about a 15-second commercial before the stream begins, but small price to pay. And then, of course, you can listen to the audio just straight from the CFRN site by going to CFRN.net. And where it says listen live, if you click that, it'll open up this little browser. And then you just click play and off you go. You're in Radio Land. CFRN. Okay, so 2 ways. In fact, I could click that. Maybe I click that. And I'll grab this link. I'll put that in the chat box as well. So that gives you 2 options for streaming live as it happens, just the audio portion of the broadcast. And if something, sounds interesting, you want to learn more, you can always, later on when you're under Wi-Fi coverage, you can go to the archive at youtube.com/CFRN, and then you can just fast forward up to the point in the audio broadcast that sounded interesting, and you can have a look at that chart or whatever it is we happen to be talking about at that time. Okay, so there we go. That's that. Oh, and we don't talk about it a lot, but because it's just, well, anyway, CFRN streams 24/7. So when the radio broadcast ends today, if you tune in, you'll either hear an episode of The Mind of a Trader. The Mind of a Trader was produced for CFRN by Steve Croft a few years ago. We own exclusive worldwide rights to 170 episodes. So when you tune in to CFRN round the clock, using one of the links I just shared with you, you'll either hear an episode of The Mind of a Trader, or you will hear a hand-curated song and or sermon personally selected by moi for you. So there you go. So I saw a text yesterday morning, I think it was, that you had a burglary on your premises.
Yeah.
What happened?
Yeah, they broke into Jada's car and stole her purse, and they No, Jada doesn't usually carry cash, so I usually throw cash in her glove box.
Mhm.
And they took all of that, and they took her purse, and fortunately,
Is that what they mean
her
by just
wallet-
throwing your money around? Is that what they mean?
Well,
no,
I
I'm just
I
kidding.
just put it in her
I
glove
got you,
box
I got you.
because she's going to get something to eat in a fast food place or something like that. I'd rather.
Good
she
thing you
use
had no
that with cash.
firearms in there.
I know. Well, that's what I was thinking, because if they'd have broken into my truck, I got a 9mm Ruger in my glove box, and so yeah, I'm glad they didn't break into my truck. She left her car unlocked, is what she said. So she's taking the blame fully on her. But the good thing is,
Oh,
her
it was
wallet.
unlocked, so they didn't actually smash a window or anything.
Right, they didn't smash anything. Her wallet was not in her purse, so they took her purse. It's just got a whole bunch of girl stuff in it, and it didn't have her wallet. Fortunately, she had. I don't know how she managed to do this, but she had left her wallet with one of her employees, Maddie, and so they didn't get the wallet, and that's good because she had my ID. She had my driver's license in her wallet. So we would have both lost our driver's licenses, and she would have lost all her credit cards and all that stuff.
Yeah, that's always a real aggravation.
Yeah.
When that happens.
Yeah, it is.
Everybody should have one of those things where you've got your ID and your credit cards. They're all registered and stored away safely in one place, so that if something happens, like happened to Jada, and if they do get your ID and credit cards, you're not stuck, trying to remember. Okay, I got one card at this bank, and I got one over here, and yeah, that's not a efficient way to do it. So there's a lot of. I think if you have LifeLock, I believe they provide a service like that where they keep all that stuff safe for you. And with Legal Shield, I think not only do they provide a place for safekeeping, but when it happens, they actually, and LifeLock might do this too, they actually spring into action for you and make those phone calls. Hi, calling for a client, account number so-and-so, blah, blah, blah. Need you to cancel that card, it's been stolen. And so they do that legwork for you. So anyway, I guess we'll back to the matter at hand. Now, right here, guys, this chart I have up, S&P 500 Emini Futures. What's the next high probability move? Think about it. Think about it. Okay, now you've made your choice. What obstacles are there in the path of price doing what you think is the next high probability move? Obstacle, obstacle, obstacle. Let's try this. Let's try this. There we go. Okay. Now do you see the obstacle? There's really three. There's only two I would really be concerned about, because it's going to have to go through the first one to get to the two that I'm going to mention. So the first obstacle would be this swing high. Okay, and as you can see, price is pinging off that already, kind of pinched between this swing high and the zone, kind of back and forth, back and forth. When that happens, it's just the market trying to make up its mind. The market is assessing all the buyers and sellers that are part of the order flow and orders that are waiting to flow. And what do I mean by that? I'll show you. These are all orders waiting to flow. They're locked and loaded, ready to go as soon as there is an agreement made between buyer and seller as to the price being paid. 2,220 contracts on the bid. Now that's just what you can see. With icebergs, I mean, there's no telling how much is really on the bid. And on the ask, got about 2,200 as well. So pretty fairly balanced. But again, this is a representation of what's in the order flow. It's not the actual numbers, because that's an unknowable number. So, okay. So we've got to deal with that. Then we're going to come up on, and we're going to come up on both of these really at the same time, just because of the structure of the market. what we have is a bullish cross right here. Coming down, that could be good support. So that's an obstacle that could prevent price from getting back to the zone below. The other obstacle is right there, the BBC. See, when we approach the BBC from below, we expect it to be good resistance, as it was here. And when we approach it from above, as we may do here shortly, we expect it to be good support until it isn't. Therefore, you might potentially, I wouldn't, but you might, you could consider something like 29.73 down to, 29.71, but that's cutting it kind of close. My preference would be to let price overcome these obstacles so that there's no real obvious obstacle in the way, sort of a clear shot. So let price deal with the cross. Let price deal with the BBC. And if it can overcome those obstacles and get down into this area, then the high probability move remains the zone below. It's just that you now have a clear shot at it without any obstacles. Okay. All right. Okay. I said I had a couple pieces of news. Let me give you at least one of them, or maybe two of them, because they're pretty interesting. We talked yesterday about the new Google supercomputer. Have you heard about this, Michael? The new
I have not.
Yeah, it can perform calculations now that would take IBM's fastest supercomputer years to do. It can do it in, well, it'll probably say something here in this article. Where'd it go? Here it is. So yesterday we talked about the computer, and we talked about the fact that with that much horsepower, it could de-encrypt cryptocurrency. But they say not to worry, so let's find out. A well-known cryptographer has poured cold water on fresh fears that recent advances in quantum computing could endanger Bitcoin's security. In a Twitter discussion on September 24th, ex-Bitcoin core developer Peter Todd led the criticism, which followed claims from Google that it had achieved quantum supremacy. In a paper seen by the Financial Times, the tech giant said it had created a computer that solved an equation which would otherwise take 10,000 years in just 3 minutes and 20 seconds.
Wow.
Yeah, right? That's freaky.
Yeah, it is.
The publication quoted the paper as saying, "To our knowledge, this experiment marks the first computation that can only be performed on a quantum processor. Quantum computing has previously formed an area of contention for cryptocurrency proponents. In 2017, for example, experts dispelled myths that such machines could undermine the security of the Bitcoin blockchain." Similarly, Todd now concluded that financial impediments to Google's latest creation alone would keep Bitcoin free from potential trouble. It means nothing because Google's quantum breakthrough is for a primitive type of quantum computing that is nowhere near breaking cryptography. He added, "We still don't even know if it's possible to scale quantum computers. Quite possible that adding qubits will have an exponential cost." Earlier this month, details emerged that the United States National Security Agency was attempting to research and create quantum-resistant cryptography. So, there's that little bit of news. Now, this little bit of news, the title, let me just give you the title of it, Day Trading Bitcoin. Why 95% of traders lose money and fail. Now, they're talking about Bitcoin because the publication I got it from is a Bitcoin publication. But let's see if any of these other things might apply to those that are day trading stocks or futures, etc. Almost all traders are aware of the widely publicized statistic that 95% of traders lose money. Now, if you look up at my screen, it says 9 split hairs on that. I'll just put the chart back up. Okay. Now, let me continue with said news piece. Almost all traders are aware of the widely publicized statistic that 95% of traders lose money. When you drill deeper, research implies that this number is likely higher. The profession chews up and spits out aspiring traders at an astounding rate. So why are so many intelligent people drawn to a profession with incredibly high odds of failure? That's a good question. Here are 6 striking stats showing traders have it rough. There are the obvious reasons that people want to become traders: the appeal of working for yourself, sitting in your underwear on your couch all day making millions. There's the false, in quotes, promise, the false promise of easy money and the draw of independent wealth. Now, you hear us say it all the time. Trading's not easy, never has been, never will be, but it can be simple. But let's stay with the point of this story here. There's the false promise of easy money and the draw of independent wealth. I mean, visit almost any website on the internet that has to do with trading, and somebody is going to try to convince you that it, in fact, can be easy. Not simple, but easy, and that they have the key to unlock the vault of untold wealth and riches just for you. And what's even better, it's only $99.99. But wait, there's more. We'll send you 2 for a separate fee. I never got that part of those commercials, but I guess they're just telling you can buy 2. All right, here's the truth. Day trading is extremely difficult, emotionally taxing, and far more likely to destroy your life than enrich it. Yes, I know this is a radio program about day trading and swing trading and trading in general. So shouldn't I be trying to hide this article rather than bring it up in front of the entire audience? No, because that's what we do. We deal in the truth about trading day in and day out. That's our currency, the truth about trading. So let me continue. Here are a few key statistics from online educational resource Tradicity. Number 1, 80% of all day traders quit within the first 2 years. Number 2, among all day traders, nearly 40% day trade for only 1 month. Number 3, within 3 years, only 13% continue to day trade, and after 5 years, only 7% remain. Number 4, the average individual investor underperforms a market index by 1.5% per year. Number 5, active traders underperform by 6.5% annually. And number 6, traders with up to a 10-year negative track record continue to trade. We know, we've met some of those people, huh, Michael?
Oh, yeah. Yes, we have.
The last point suggests that day traders even continue to trade when they receive a negative signal regarding their ability to trade. If somebody would just peel back the, one layer of this onion, all of these people, all of this failure, all of this angst and anxiety and depression and sadness and blown up accounts, it's all because of one reason. Nobody ever taught these people how to trade.
And they keep switching from one thing to another thing to another thing to another thing. They're looking for the gold.
Which keeps the vendors, which keeps the vendors that line the road to Wall Street fat. That's P-H-A-T, fat, I think. Anyway, everywhere you turn, there's some new miracle cure. you know, work 5 minutes a day or never work again, or whatever the promise, whatever the outlandish thing is, just know that it's outlandish, and it all boils down to just one little thing, and you'll find it in Genesis. Most of us listening to this radio program have read Genesis. Many of us started reading it, you know, when we were very young, just a wee lad or lass. When God created Adam, he put lots of stuff inside of Adam, but there's a couple of ingredients he left out. The first ingredient he made a conscious decision not to include in Adam's recipe was the ability to change the past. He also left out the ability to know the future. And those two things are inextricably linked for eternity. So, here you have Genesis, which you either believe or you don't, telling you that God didn't put these ingredients in. Then you have all these websites that tell you, in fact, they do know the future. They may not promise to change the past, although I think some of them do with historical charts and a little Photoshop, but that's another issue. But all of these websites will attempt to convince you that they somehow have found the secret, the key, and they do know what's going to happen next. Now, what I just said about this, I didn't say I know what's going to happen next. What I was trying to help you see was what the next high probability move is. I also said that the market doesn't always do what appears to be the next high probability thing. But it does it more often than it doesn't, which is why it is called the next high probability thing. So we'll monitor this throughout the show just to see what happens to it. Back to this article, the last point suggests that day traders even continue to trade when they receive a negative signal regarding their ability. It's astounding. Almost everyone, and I'm quoting this from this article, almost everyone loses. They lose fast. They underperform simple, mindless investments, and they continue trading even after being proven unprofitable. Now, it's critical what's said here. Now, you've looked at, I know most of you have looked at all kinds of different methodologies and strategies, and boy, can some of them be so complicated. And right there, it's in that complication, in the convoluted nature of which it's created and presented, it's no wonder that everyone is wandering around lost. Remember, trading's not easy, but it can be simple. What we do is simple by design. It's not that Michael and I don't understand complicated indicators and oscillators and methodologies. We do. We used to own them all. Everything. Even the stuff we created ourselves. But we reached a point where it became just obvious. That wasn't the answer. Just one more filter, one more thing. That wasn't going to solve this complex problem. Which led us to the discovery that it's only a complex problem if you make it one. You don't need a quantum computer to solve this equation. If you can keep it simple, sailor, KISS, if you can keep it simple, trading can be simple. But you start dragging in all of this heavy math. Now, we have some heavy math going on in the background behind our couple of simple indicators, okay? But that's not anything you ever have to worry your pretty head with, because it's simple. If price is above the BBC, we anticipate higher prices. If it's below the BBC, we anticipate lower prices. Price moves from zone to zone to zone, day after day, week after week, month after month for the past almost 10 years. And if I look at historical charts, back before we ever started working with these zones, which was before we ever published the zones for the public, it would appear that this same thing was going on long before I knew what an Emini future even was. It was also going on in the stock market long before anyone ever dreamed up an E-mini contract. Back to the article. The truth is, most would-be traders are woefully underprepared for the challenge ahead and learn many hard lessons with their real money. I don't even have to say anything about that. They underestimate the psychological challenges of trading and fail to eliminate emotion from their trades. This article should be cast in gold and hung on every trader's wall, because right here they're dispelling, or they're showing you, telling you, explaining to you the very thing that we've said every day at this time on this radio program for many, many years. That's the truth about trading. Traders underestimate the psychological challenges of trading and fail to eliminate emotion from their trades. If you've ever been in the live training room in the morning, Michael, he cracks jokes, he shucks and jives with the best of us, but when it's time to turn to the chart and put on and take off a trade, he's deadly serious. But maybe deadly serious isn't the proper term, because there's really no emotion attached to what he's doing. He's simply performing his function, his role as a trader, with no emotional attachment. You can hear it in his voice. When he has a good trade, he doesn't get all giddy with excitement dancing on the desktop. And when he gets stopped out 3 times in a row, he doesn't curl up under his desk and go fetal. He says, next, because he understands that our methodology and our indicators provide you and him, all of us, with a definable edge in the market. He understands this is a business based on probabilities. You'll never be able to swing those probabilities in your favor as long as your vision, your thinking, is clouded with feelings and emotions. Feelings and emotions are an important part of the human experience, but they have no place in the world of trading. Back to the article. They also fail to trade with a defined system. When they have a defined system, they often take trades outside of their own established rules. Now, these are all obvious reasons why, their numbers not mine, 95% or better of would-be traders fail. There's this other thing called random reinforcement. Perhaps a less notable reason that traders fail is the principle of random reinforcement. This concept also explains why they often continue trading even after failing repeatedly. As defined by Investopedia, random reinforcement is this: using arbitrary events to qualify or disqualify a hypothesis or idea, attributing skill or lack of skill to an outcome that is unsystematic in nature, finding support for positive or negative behaviors from outcomes that are inconsistent in nature, like the financial markets. Now, Michael, is that not a pretty good recap of what Mark Douglas tries to teach all of us in Trading in the Zone?
Chapter 7. Yep. That's a pretty good recap of what he says.
We've been preaching that and slapping that Bible for a long time.
We have. We do the same thing every day, day after day, week after week, month after month, year after year. We do the same thing.
Now, here's where it gets cruel and unusual. Except I guess it's not so unusual. Here's where it gets cruel and usual. The market has a tendency to reward bad habits while concurrently punishing positive behaviors, especially with a small sample set. Let's take a theoretical example to display this principle. Bob wants to leave his job and become a crypto trader. Now, again, I believe you can insert stock, futures, options, anything you want where it says crypto trader. You insert whatever it is you are or whatever it is you're trying to become. He sets aside some starting capital, follows the markets and the big names on Twitter. He sees them talking about an altcoin. That could be a stock, a futures contract. He opens the chart and sees that price is rising fast. He buys, goes to take a shower, returns, and sells for a quick profit. He does this again before lunch and strings together a few successful trades. Bob starts to feel confident that he is a talented trader. So what's the problem? Well, Bob is trading without a system or a plan, is being fooled into believing that a successful outcome on a few random trades is indicative of likely success moving forward. The market has rewarded his bad behavior. We know how this story ends. Bob continues to make impulsive trades and eventually loses his capital. Now, there's a flip side to this coin. Let's say that Bob learns his lesson and spends months developing or learning a trading plan, complete with risk management, proper portfolio allocations, and trading rules. He identifies a trading opportunity that fits, takes the perfect entry, and stops out of his trade. He tries again and again. He loses 7 times in a row. The market is punishing Bob for his good behavior. Remember, you're taught to use a hard stop, and he's using a hard stop, and the market is flogging him for his good behavior. So what happens is what Michael just referenced a minute ago. Bob starts to doubt his system and takes a high-risk trade that violates his system, and lo and behold, it brings home the bacon. It's what some in the parlance would call a winner, or what I call a profitable trade. To his surprise, Bob tries this a second time and gets rewarded again for his bad behavior. Bob is now back to square one, trading without a system because the market has rewarded his bad behavior. Through random reinforcement, the market has reconditioned the way Bob approaches trading by distracting him away from his trading plan. He has allowed himself to be manipulated into an impulsive, high-risk, revenge-based trading approach. Now, everybody was a genius in 2017, at least when it came to Bitcoin. The concept of random reinforcement was never more evident than in the crypto bubble of 2017. During this parabolic bull market, it was easy to mistake luck for skill. Amateur traders were making money hand over foot by simply throwing cash into random movements and selling after massive immediate gains. Everyone was a genius in the 2017 crypto market until 2018 happened. The bubble popped, and these amateur traders were ill prepared to deal with the drawdown. They failed to sell their assets and held blindly until they lost everything. Side note, most of the money managers on Wall Street today, the ones that are managing your money, your pension fund, they never traded a bear market. Some of them aren't even old enough to shave. They've never seen a bear market. How are they going to handle your money when the bear comes? And the bear always comes. Okay. Understanding that markets are dynamic and in constant flux is the key to being profitable. A trader must learn to be able to determine when a certain string of unprofitable trades or profitable trades can be attributed to their skill and also know the difference when it's simply random. Now, the only way to do this is by trading with a defined plan over a long period of time in which you will develop a large sample size. Every trader should have a well-developed and tested trading plan with written rules for entries, exits, stop losses, position sizing, and risk. And they should never trade outside their plan. If you change your swing every time you step up to the plate, you're never going to really know what works and what doesn't. No more than 1% of a trader's portfolio should be at risk on any single trade. This is the key. Now, I'll be honest with you, that 1%, not a fan of that number. I don't think it's realistic for someone that's beginning to trade futures, but we can talk about that at a different time. It's okay if I and the author of this article disagree on this one little fine point. And I'm not taking his 1 to 10, but I'm thinking 2 or 3 is probably more a realistic picture. But back to the article. The key to sustaining multiple consecutive losses is by not risking too much or trading in too large a size or trading too many contracts before you earn the right. Whatever your plan or strategy is, you should test and tweak that plan over a long period of time, hundreds of trades, or find someone who has a methodology or a strategy that has been tried and tested day in and day out for years on end without changing a single line of code or a single rule. Can you say CFRN? All right, back to the article. A good system gives a trader an edge over a long time frame because randomness becomes less of a factor with a larger sample. A good trade should be defined as one where a trader planned their trade, traded their plan, and managed their risk. Those are all elements they can control. It is not defined by the outcome of the trade. Now, I know you need to hear that again. A good trade should be defined as one where the trader planned their trade, traded their plan, and managed their risk. Because you see, those are the things you can control. So you have to do your part. We call it consistent behavior. Everyone wants consistent results from the market, but few people give the market a consistent effort. That's important. Work on what you can control. Do not judge your skill or ability as a trader by the outcome of the trade. Because then your emotions and your feelings will grab a hold of you and take you down every time. A bad trade, on the other hand, is where a trader fails to follow their rules and executes trades against their better judgment. This is always going to be a bad trade, even if it turns out to be profitable. By developing a well-tested plan, traders can overcome the pitfalls of random reinforcement, eliminate emotion and impulse, and learn. You have to learn to be profitable. That's how you can become a part of the 5% of traders. That's 5 people out of 100 who make it and go on to become consistently profitable traders who trade for a living. That's a great article. I'm going to make a copy of that available in the Telegram discussion group for everybody. I think everybody should read it. You should study it. You should print it and hang it on your wall, and you should live by it. If you live by what I just read you from this article, there's a high probability you can make it. If you go against the grain, of this narrative, it's a high probability you're going to end up like the other 95%. Are you willing to do what is necessary to make a difference? Only you can answer that question. And right here is where Valerie's going to splice this video. And Valerie, we're going to cut out that part where I just shared this article. I think it's really that important. So thank you very much. Okay, let's see. I got some stuff in the chat box. More reason, Wayne shares, more reason to worry about artificial intelligence. Yeah, that trading accountant this week who told me startup costs could be deducted also said not to stay. Who told me that startup costs could not be deducted also said not to stay in sim too long. You know, Joan, I agree with that a little bit. I've seen some folks after 5 years, even more, they're still in sim. I'd rather them be in sim than trading live money because they would be losing their real money. Okay, but at some point you have to break free from the, you know, how's that saying go? Unless you let go of the pier, you can never discover a far and distant land. Something like that, but they say it better.
I do not know.
Yeah. As long as you're holding on to the pier, you're not going anywhere. So at some point, your sim trading, there's a purpose behind sim trading. That's to help you learn and understand, be able to see and implement a specific methodology or strategy. Now, if you can become consistently profitable in sim, then the next step is to go live with one contract and build your account size, and then you add another contract and you build your account size. That's how that works. But what I've seen happen to many people, they do what I just said, and then they go live with the one contract, they get stopped out 2 or 3 times, and they revert back to sim, which again, I'd rather see them do that than just keep trading. And over the years, they poke their head out of sim every now and then, randomly, looking for a quote-unquote big win so they can validate, you know, going live and trading for a living. And it's uncanny how it doesn't matter when they choose to stick their head up out of sim, be it winter, spring, summer, or fall, they get their head lopped off. So they, like a turtle, you know, they put their head back in the shell, spend another year or two developing some killer strategy, and then that fateful day comes, and once again, they're all primed, ready to go. I mean, we've been waiting for this next trade setup here for a year. Here it is. Let's do it. And you get smashed like a cockroach, as Mr. Wonderful would say. Don't do that to yourself. What this article said, and also what Mark Douglas says in his book, is that you have to have a large enough sample size to take the randomness out of the market. You need a large enough sample size to see what's working and what isn't working. Now, one of the most common things I hear is, I kill it in sim, I'm awesome, I am He-Man, trader of the universe, until I go live, and then, and that's when the conspiracy kicks in. That's when they're out to get me. Now, they'll let me make money in sim, but the second I go live, they take my money. It's a trap. No, it isn't. It's not. You gotta have a large enough sample size. When you go from sim to live, the only thing that changes, the only thing is you. Specifically, your way of thinking. And of course, the way you react to the way you think. The second we go from sim to live, we become more protective of our account balance. all kinds of things enter our mind that were not present when we were trading in sim and there was no threat of losing real money. So that takes us back to the article and the Trading in the Zone, where this author and Mark clearly state, and we've preached this for years, you've got to figure out how you're going to separate yourself, your trading, and your emotions. I've walked people through exercises where they put a little basket outside of their door, their office door, wherever they trade, and it becomes like a ritual. As they're heading into the office, they stop at the little basket and they mentally deposit their feelings, their emotions, all of that stuff. And they pause for a minute and they think about how important this step is. And a lot of people, that's actually helped them. Now, years later, they don't still have to stop at the basket, but they know the basket's there. And if they ever feel themselves getting caught up in the emotion of a trade, positive or negative, they're taught to go back out in the hallway and stand by the basket and get that stuff out of you, throw it up in the basket so you can go back into your office and go back to work. Okay. All right. Joan says it costs money to stay in sim. It costs a whole lot more to leave sim when you're not ready. I mean, what does it cost to stay in sim? What's it cost, Michael? What does that cost?
All right, I believe the cost is free to stay in sim. Or actually, it might be $16 a month because you got to pay for it.
Okay, $16. Now, Joan, you might be with a different broker. Are you paying more money than that to stay in sim? And I'm not saying that you're in sim. I don't know. That was meant as a dig at all. Just
I believe there's also an inactivity charge.
Yeah, that's every 3 months. It's like $30 every 3 months.
Okay.
So Daniels does have an inactivity fee. I didn't know that. Okay. Well, all right then. Let's go to the... Did John ever show up?
I didn't see him the last time I looked.
Okay. Well, let's jump to...
And not yet.
Okay. He'll be along. I guess. I don't know. Maybe something happened. Let me see if he tried calling me. Let's see him. Well, I need to get these done. We'll try to reach out to him before the show is over. And I just got a text message on my private line. It says, Dwayne, it's Liz. Okay, number one, I don't know anybody named Liz. Dwayne, it's Liz. I called you. This is a text message. They've actually put this in writing. Dwayne, it's Liz. I called you a couple months ago. I was checking back in with you on our previous discussion regarding a line of credit. Well, see, I know that I've had no discussion with nobody, especially not a Liz, but I've had no discussion with nobody regarding any line of credit. Can we hop on a quick call to discuss this? Here's a tip. Anytime somebody asks you to hop on a call, just delete it. I want to send back some foul message, but I'm going to resist that urge because I'm a Christian, and I'm just going to delete it. Thanks, Liz. Okay. All right. Concierge Trade Alerts. If you want to grab a screenshot, guys, here we go. Got them out last night, just under the wire. I try to get them out between 6 p.m. and 9 p.m. Eastern, Sunday through Thursday. When this static report comes out, it's good for the entire session. These are the ones based on prior price behavior. When we get to the Logic 247, those are the ones based on current price behavior. Now remember, when both fingers point at the same price or same area, it deserves a second look. Okay. So the S&P said to consider being long above 29.85. Well, that never happened. Then we said consider being short below 29.66. 29.66 is going to be down here-ish. There we go, 29.64. Now we understood fully that entering a position at 29.64 only gave us 3 points. I'm sorry, 66. Entering at 29.66 only gives us 5 points of room to run before we hit what we anticipate to be good support. Why? Because it's a weekly trading zone. This week zone, all of these are this week zones. Just on the S&P, I haven't changed the other ones yet. So 60/61, where that big sell-off yesterday found support. And again, and then again. So, but these had not happened when this came out. So CTA, sell 29.66. All right. So from 29.66 down to 61, 5 points available. That's what the market made available. Price then got back above the trigger. Triggered a second time. Important prices, important areas are almost always tested. So it offered 5+ points here and 5+ points here. And we're still consolidating in that little area we were at when we opened the show, and we talked about the next high probability move. And I said what the market's doing right now, pinched between this swing high and the zone overhead, is just that. Price is pinched there. It's in a decision-making process. The market has to decide, after taking an inventory of all the buyers and sellers in the pre-order flow, or the order pre-flow, are there enough buyers to take this thing up to this zone overhead? Or are there more sellers? So price then decides. It's not really a decision, it's kind of forced. See, buyers and sellers are what move the market. Order flow is what turns price. If you think this zone turned price back up, I have failed you. And if you think this zone turned price back down, I have again failed you. Order flow turns price. The fact that we have a high probability idea of where order flow is going to change, well, that's a whole different story. True story. But never let anybody sell you a bill of goods that they have some kind of indicator or oscillator or whatever that's going to turn the market. That's just nonsense. Okay? Knowing where order flow might change to such a degree that the direction of the market changes, well, obviously that's very knowable. Is it not? I mean, yeah, it looks knowable to me. Anyway, there's John. Okay, we're going to open up John's mic, guys. We've recapped the S&P Concierge, so we're barely getting started. We're going to cover all the Concierge Trade Alerts, all the Logic 247 alerts for the week, and of course answer all of your questions. John, welcome to the show.
John's not in here yet.
John's not here, man.
No.
Oh, he must be having trouble. Oh, if he's not in, then that means he's having trouble logging in, I guess. So let me call him real quick. I'll be right back.
Okay. Joan got 4 calls from herself yesterday. Yeah, that's crazy. All right. So the weekly trading zone, 29.79. We're consolidating near that. And what's the most likely thing to happen is a push down off of it once we break the consolidation area. That's what Dwayne was saying. Now he's looking at it on a 30-minute chart. But when I look at it, I'm looking at it on a 4-tick range chart. And 71.75 is the low. Okay. Okay. Yeah. Yeah, I can hear you.
I'm here. I'm here.
There he is. Okay.
Yeah. Sorry about that. Can you hear me? Yeah. Great. Yeah. Thanks. A few things. Well, we actually called. I just saw this spike in the market this morning when it spiked down, and it looked like it was going to rally, and then there was this business of the transcript coming out, and it seems like it was storm in a teacup. So the market, recovered and reversed. And when I called a few people, told them get out of the gold, go short, and thanks, and and also to get out of the TBIX. It's not off a whole lot. It's kind of I can't really see it very well, but I think at the time the TBX was right at the highs, and probably a good idea to just get out. And I remarked yesterday about the LABU being very bad. I think I mentioned that, kind of heading down again, but it actually put in a pretty good buy this morning. So the market actually, having found this reversal point here, and by the way, the buy this morning was really super strong, was really one of the best buy signals we might have had in a while. Kind of reached down and then just spiked right back up. I think Trump said something about trade deal is near. I haven't seen the report yet, but that probably helped the market. So it's kind of back on the bull side now. The market's looking pretty good, and especially the mid cap is leading the way, and the Dow. If you look at the Dow, it kind of looks like it's gonna. It might be the first one to break out to a new high. Now that's not necessarily the preferred situation. We'd rather see the transports and the mid cap lead the way, and the Nasdaq. But I don't think at this point the Dow going to a new high is gonna hurt. It might drag the rest of the indices up with it. I guess Boris Johnson, they're after him over in England now over this Brexit thing. So all of the European currencies are down. The dollar's very strong today, heading back towards the highs. And this is actually the first time the dollar has been strong and gold has been down. So there's a little bit of a change there in the behavior that's probably worth noting. And I'd be pretty careful with the gold for the time being, given what's happened today. We've given, we went up $1 with the silver a few days ago almost, and given about half of it back so far. So but the gold is down a lot today, and that's not so good. The platinum, by the way, is, giving it up again. I mean, it's just amazing. I really thought that we were off to the races, but the platinum has come back down, which I kind of like because it's going to give us another buying opportunity at some point. Given where the gold is going today, and this very sort of dramatic reversal, unfortunately, it's kind of torpedoed the technicals for a while on any positive front. It's still, retrievable today. If we did get a bounce back up towards 1530, it would be a lot better, but it doesn't look like that's going to happen just yet. So given the overwhelming kind of down day that we're having, it looks like the gold, the correction that people were expecting a week or two ago,
right,
where they thought it might go down into the 1400s again. I unfortunately, I think that's a possibility now. But at the end of the day, it's gonna give us a great entry point.
Absolutely, just buy at a better price.
Right. So the copper is holding up quite well today, which is, I think the copper's bottomed, and I'd definitely be buying the dips on the copper. And remember, we remarked about the cocoa a while back, and the coffee.
Yep.
The cocoa is hitting new highs today, and the coffee as well. They just closed a short while ago. Coffee's up. Coffee looks, Coffee actually looks like it's a buy here. It's just dipped below 100. It's now back over 100, and it has a big sell, up around 105, 110. If it sort of takes that out, if it exceeds that and barrels on, I think you can probably conclude that the coffee has actually bottomed. And bottoming in the fall for coffee is a good thing, because it probably means that the coffee will rally into the end of the year and potentially next year ahead. One of these years we're going to get a frost, and it didn't happen. It didn't really happen this year, although we had a few frost scares that rallied the market. But next year might be that. So look.
The weather's turned cool here in Phoenix, noticeably.
Right,
so.
finally it's been kind of unseasonably hot in the southern U.S. for quite a while. So as a result of that, I think I wouldn't be surprised if the coffee is $1.30 or $1.40 going into the second quarter of next year or into the summer of next year, and that could be a whole. And look, the fact that the cocoa is rallying as strongly as it is, I think is a good thing too. Remember, these things tend to lead inflation, and by the way, then notice the sugar is picking up too as well today. So, and the orange juice, well, it's kind of under $1. I'd probably buy it.
I saw a big sale on orange juice yesterday. On Tuesdays we get all the grocery store coupons, and they're blowing it out. Pretty cheap.
Yeah, they really are. They really are. And I guess look, probably people are getting this cutting back on sugar and things. And there's so many competing drinks to orange juice now out there that maybe that's also kind of
that could be it.
Yeah,
part of it.
So, but the general, I'd keep an eye on cotton. I'd definitely buy it. Probably buy it. Copper going higher here. It looks like we might be going higher. Remember, we're maxed out on a stimulus worldwide, so we should see, these pre-inflationary counters pick up now from now on, including the grains, which are off a little bit today. So I guess it's going to be interesting to see how this story unfolds with Trump.
Well, the fact that he's willing to make this transcript public, I guess then it'll be left up to each individual's interpretation of whether what he said was, the whole thing about, they talk about him talking to a foreign leader as treasonous. My God, isn't that the very definition of the job of being president? Is that you dialogue with the leaders of other countries and try to keep world peace and all that stuff going on?
Yeah.
It's just ridiculous.
It's terrible. Yeah, they're going to have to do something about. They have to have some sort of secure system for presidents to talk to each other in the future. This business where everybody knows what's going on, it's just insane. The other thing is, but look, if I guess they maybe the Dems were unprepared for this video to come out about Biden. Basically, really,
I mean, he just lays it on the line.
Yeah.
Now, he says his motive, but he says his motive is different.
If he ends up being the front runner, there's only a couple of ads that they need to run out there. They need to run a few of these walkaway ads where these Democrats, they've had it with the Democrats forever. They're never going back. A couple of some of the African American ads are just phenomenal. These people like Candace. This Candace.
She is something else.
Well, she really is, and
I really like her. My wife loves her.
Yeah. It's interesting that Trump picked the press, press representative, White House press person. Very, very low key. Doesn't say too much. Possibly a good thing for Trump, really. But on the other hand, I think Candace would have been a good choice because you know, being the spokesman for the White House and being an African American, that would have been an awesome, you know, that would have really kind of killed the racist thing with Trump dead.
Right.
But it's interesting. On our own merits, I saw a tweet a couple of days ago. It had 32,000 likes and sort of similar number of retweets. That's a very big number. I mean, that's bigger than Trump. You know, he doesn't even get those. You know, he doesn't get those all the time. Occasionally, he gets something like that. But that's a big deal. That's a really big deal. So a lot of people are paying attention to her, and she's fearless. You know, she really. I don't think they're gonna invite her back to testify anytime soon, because it's a losing proposition for the Dems to bring her on. She just destroys them. And I think it was one of those tweets that did it. You know.
So well spoken, so knowledgeable, and so quick on her feet. I mean, she's always thinking 2 or 3 moves ahead of whoever she's debating.
Yeah, she's really impressive. She's something else. I've only seen her, you know, the only time I've ever seen her kind of like, she probably kept quiet on purpose with somebody who just wouldn't shut up. You know, they had somebody else on with her, and I guess she just said, my pointing, and just let her blabber mouth on. But other than that, you know, it really is, you know, everything's looking quite good today. Probably put in a pretty strong bottom on a lot of stocks here. So I think that's a positive. I mean, we're at the 25th today, and just 2 days, really 3 days before the, you know, my October, 3 or 4 days before the October 2 bottom, potentially. So
you're looking for a bottom specifically in or around October the 2nd.
I am, yeah. Or let's say next week.
Okay.
And you know, we could get a retest. There could be something, another shoe to drop or something that could knock the market down. So we make a better bottom, you know, 3 or 4 days from now. That would be nothing wrong with that. But I think October might be a bit of an upside surprise this time around. And potentially, you know, they still got some pretty good news. Still seems to be coming out. And remember, every single day, central banks are stimulating, you know, more and more. Europeans are going to be buying.
Around, this is going on globally. This is a global happening.
Yeah, they're injecting a lot of. I mean, they're going for broke. I think they have to, because this liquidity crisis that's been created, that's got to be fixed. And they're obviously doing, you know, huge, you know, 300 billion or so. It's a lot of money. It dwarfs what they did in 2000. I mean, the Dow's a lot higher than it was in 2000, but still, stimulus-wise, it's double or triple on a proportional basis. And China just went in for more in the last few days, so there is really quite a good chance of some sort of a melt-up here in the coming months as this stimulus eventually starts to work. You know, if you remember, you know, from 2009 to 2011, you know, we got pretty good results, but we really didn't get cranking until 2012, 13, 14, 15. And, you know, nobody saw that coming, that QE3, QE4. The impact was very, very dramatic. And that's sort of what I foresee ahead as sort of maybe the final leg up of this bull. And actually, given the fact that we've nipped this in the bud here, potentially here in the, you know, with this reversal today, it sort of sets the market up for a pretty strong up move to new highs, possibly, you know, as soon as a week from now, maybe a week or 2 from now. So.
Okay. Well, John, you think you're going to get your computer back online today, or?
No, probably by this evening, hopefully.
Okay.
And then tomorrow, hopefully be back on track tomorrow.
Okay. If there's anything I can do, let me know.
I got a new drive put in, but it was working great, and then it seems to be seizing up for some reason, so stuck with it. Okay. All right.
Well, thanks for coming on today. I really appreciate it. And again, if I can help you with anything, let me know.
Much obliged.
Okay. Bye-bye.
Okay. Bye-bye.
Okay. All right, so we're on the Dow right now. Concierge Trade Alert said to consider being short, 26,800. And we caught a swing low at 26,715, so that's 85 Dow points available. Alexa, what's 85 times 5? Alexa, what's 85 times 5?
85 times 5 is 425.
Thank you.
You're welcome.
So this is...
Enjoy your morning.
Yeah, you too. It's $425 per contract available. We didn't quite make it down to the zone. Swing low was 715, and the zone's at 695/700. Now, if we back up to the Globex open Sunday night, we gapped higher on the open in the Dow, all the indices. So we gapped through this zone, and then we consolidated right at it. The market made a decision. There was not enough buyers participating in that order flow to take us to the zone overhead. So the only other option is the zone below. And we had a slight edge because something that we understand and teach, because it's a market truth. With futures, the indices in particular, gaps almost always close. Almost always. So we had an alert in the logic channel to accommodate this gap fill. And it did fill. And then it found support. It found support right here at the zone. And then it bounced. Looks like it ran into an obstacle or something, huh? You think? If you'll remember back to what I just did on the S&P chart just a bit ago, but it was in reverse. See this swing low? What was support on Friday and what failed to be support right here became resistance. Now, were there any other obstacles in the path of price? There was here, but we overcame it. So this right here has everything to do with this right here. Sent us back to the zone where we expect to find good support. Whenever price drops to a zone, look for good support. And when price rallies up to a zone, look for good resistance. So with this double bottom here, the market launches a move to the zone overhead, gets there, consolidates, inventories buyers and sellers in the order flow, and off we go up to the zone overhead. When we were rejected, it's a double rejection, right? So we're rejected at the zone overhead, leg, retrace, leg, retrace, leg, which sends us back down to the zone where we consolidate. The market makes up its mind. All it can do is attempt the zone below. It made it. It not only made it, it sliced through it. What do we expect to happen when that happens? When the move runs out of steam, we expect it to retrace to the zone it sliced through. Here, it failed to be good support, so can it be good resistance? It was for an hour and a half, and then the order flow, buyers and sellers, sent price back up to the zone where we put in a leg and a retracement and a leg, and this took us right back up. This swing high is 26,900. We had a sell order. We had an alert coming down at 26,900. So what does price do? It goes right back up to that area that we alerted everyone to consider selling this price. It dutifully marches right back up, knocks on the door. Y'all ready for this? Bang. Well, we pause at the zone for some consolidation and then on down. Buyers came in early. You see what happened over here? This is simply buyers stepping in early because you see how fast this ran up? A lot of traders probably missed this move. This time, they don't want to miss it, so they come in early. And if enough buyers come in early before you hit the support point, then the actual support point doesn't get touched. Back to the zone, consolidation. Market makes up its mind. Off we go to the zone overhead. This is such a good example of price always trying to get to a zone. If you see that, if you accept that, not with your head but with your heart, if you understand that's how markets work, once we teach you to discern which zone price is currently trying to get to, that knowledge right there will trump every complicated, convoluted, horribly expensive methodology and strategy anywhere on the internet. My challenge stands. Anyone out there who has a methodology, a set of indicators, a strategy that they publicize and sell, I'm willing to sit down with you, trade publicly, head to head. We don't have to meet in person, we can do it online, with a cast of judges. I don't know if we can get Simon to participate or not. We can always send a memo or send an email and ask. And this isn't so we can brag or boast. This is just to show folks that a simple by design strategy is every bit as powerful as the most complicated, convoluted, and horribly expensive method or strategy out there. I do it not to say we beat you. I'm not even saying we'll beat them. What I'm saying is we can match them step for step, tick for tick, tit for tat, whatever that means. And I'm doing it, or the challenge exists, again, not so that we can say, well, we're better than them, because I don't think we're better than them. We're just different. We're simple. I want you, the 95% who have not yet seen the light, I want you to have evidence, proof in front of you that a simple methodology and strategy is every bit as powerful as anything else out there. We can teach you this in a couple weeks. How long will it take you to become proficient at it? I can't say. I also know that I could teach you how to play baseball, but I can't make you a pitcher for the Yankees. You would have to take that basic knowledge that I give you about how to play baseball, and then you got to hone your craft, hone your skills, wake up early, stay up late, run, jump, throw, bat, your way to the top. But I can say this too. No one who doesn't know how to play baseball has ever become a pitcher for the Yankees. If you've never been taught how to trade, you will never trade for a living. Okay, let's move on. We'll do the Russell. Oh, we had a swing trade that closed on the Russell. Logical swing trader, number 39, being short the Russell, 1557 down to 1541. Here's the entry. Took a little bit of heat. Final target. That final target, entry to final target, $800 per contract traded. Any trader who's earned the right to trade 10 contracts earned the right. That is an $8,000 move. It triggered Sunday night. No, that's Monday, right? Yeah, triggered Monday night and hit the final target yesterday around noon. Now, last night, Concierge Trade Alert, consider being short, 1534. That's going to be right here. $15.34, and the swing low. Yeah, we'll call it $15.30. So 4-point move twice at $50 per point, $200 per contract traded. We also said consider being long at 1549. Okay, so 1549. Now that crooked line will bug me all day if I don't straighten it out. Okay, all right, 1549, and the swing high so far, 50, almost 53. Call it 52. So that's $150 per contract traded so far. Okay. All right. Gold. I just did gold while I was talking to John. Concierge Trade Alert said to consider being short 1534. We dropped to the zone below at 28.29. We continued to drop to the zone below at 18.19, where we continued to drop to the zone at 13/14, and that appears to be where we've found some temporary, at least, support for a couple of hours, consolidating at the zone. Now, when price is consolidating below the zone like this, that is one part of understanding that the market is, at this point, it appears the high probability move will be to the downside. If it were consolidating just above the zone, I would be leaning more towards the zone overhead. Now, this isn't done. The mind is not made up. How long could we go sideways like this? In this little, couple, 1 point range on the zone, a couple points on the chart. As long as it takes. As long as it takes for buyers to outweigh sellers in the order flow, or sellers to outweigh buyers in the order flow, we will go sideways until that happens. If it turns out that there are more sellers than buyers participating, then we look for a move down to the zone below, and that's not the lowest weekly zone for gold. That is 72/73. 96.97 would be the next zone below. So, of course, right here, this could serve as an obstacle. This could become good support right here, the low of this candle. If we take out that low, and even better, hold it on a pullback, okay, then from 1505 down to 97, that's an $800 per contract move. This is not a solicitation to buy or sell any security or futures contract or anything else for that matter. Always do your own due diligence. Always consult with a licensed investment professional before making any investment or trading decision. NQ. Okay. I haven't switched out the zones on the NQ, but we did have a logical swing trade number 40. That's the last one. I'm putting together a web page so that you can see them all on one page. This one. Here's the entry. Here's the stop loss up here at 79.20. You can't see it, it's out of the picture. So we triggered at 78.40 and we dropped to 78.14. 26 points at $20 a point. We'll call it $500. So this first trigger was good for was worth $500 plus per contract traded. We got back above the trigger and the market handed out about $700 on the second trigger. And then we go up to challenge the previous swing high, an area that we expect to be good resistance. We trigger again as price seeks out the final target down here at 77.40. So from 78.40 to 77.40, that's 100 points. The NQ pays $20 per point. So that's $2,000 per contract traded. The trader who has earned the right to trade 10 contracts saw this as a $20,000 move. Okay. Entry. The stop loss never took any real heat. We triggered once. We triggered twice. There was potentially a false trigger here, but that's okay because the stop wasn't hit. And then, so 1, 2, 3, 4. 3 of which generated a profit. 1 of which generated a profit that took us down to the final target. Last night, Concierge Trade Alert for the NQ. Consider being short 77 1/4. Okay. So that's going to be right here. $77.25. The first swing low, $76.83. Alexa, $77.25 minus $76.83.
7,725 minus 7,683 is 42.
Alexa, 42 times 20. That's 840.
42 times 20 is 840.
Thank you. So $840 per contract move on the first trigger. The second trigger took us all the way down to 76.63. Alexa, what's 77.25 minus 76.63?
7,725 minus 76 is 7,649.
You got to really say it fast for her to grab a hold of that. Alexa, what's 77.25 minus 76.63?
7,725 minus 7,663 is 62.
Okay, 62 points available. Alexa, 62 times 20. Alexa, 62 times 20.
62 times 20 is 1,240.
Thank you very much. All right, so we had the first trigger, then this second trigger. The second trigger, market made over $1,200 per contract available. Now, I haven't put the zones on here yet. Oh, you know what? I might need this chart again. What about this one? It's the same thing, yeah. Yeah. Okay, so let's do this. I'm not going to do them all right now because they just take up too much time. I just wanted to point out the zone that we found support at was 77.30 slash 31. Okay, that's pretty close. That's pretty close. Support, and then as we moved up, the zone above that, 78.13 slash 14. So we're heading up to resistance. It's 70. The actual numbers are 78.13 slash 14. Now again, all of this week's zones, which is what you see me putting on the chart today, these were all sent to our partners and passport holders Monday morning at 6:15 a.m. Eastern, before Wall Street even woke up, so that all of our traders could get the zones on their chart, because that provides them with the framework within which we're going to operate for the entire week. Once the zones are published and the traders have them, they don't change, we don't massage them, we don't manipulate them in any way. Once they're out, they stand. Okay? All right, so we covered S&P. We talked about that. Now, I don't think we talked about the long side. Now, this line that you see drawn here, that was that line right here. Okay? And I'm so glad I said what I just said, is that price is still making up its mind as it was going sideways here. It would appear to the naked eye the market's made up its mind. Okay. We provided a narrative what it would look like if the decision was to go to the zone below. And we established some parameters. Remember I said, while you could get short where it was and then hope it goes down and can overcome those obstacles, I said my preference would be to first let it overcome the obstacles so that I have just a clear shot at the zone below. Well, we never got that clear shot. Okay, so what kind of obstacles might we run into on the way back up? These lows are what we're dealing with right now. Could that turn the market, send it back down? It absolutely could. I'm not saying it will. I'm saying it could. Now, important prices, important areas are almost always tested. We had a Concierge Trade Alert to sell $29.91 Monday morning, 3 a.m. Eastern. Well, that's when it triggered. The alert came out Sunday night. And then we had another Concierge Trade Alert and a Logic 247 alert that said sell $29.91. So it was good to us here. It was good to us here. Got long up here. And then it was good to us again. So you see that little pullback right there? This is that, right? Okay. If we can overcome this obstacle, the next obstacle overhead, you got it, $29.91. If they were good triggers to get short coming down, I gotta believe there's the potential for that to be not only good resistance, as if we continue to climb, it could serve as a trigger at $29.91 to be short again. Okay, so how do you deal with that? Let's try this. Put a line at $29.91. Okay. This is what I call the sweet spot. We overcome this obstacle and we've got a clear shot at the next obstacle. So that little spot in between I call my sweet spot or window of opportunity. So the bottom of that rectangle, 29.85. Top of the rectangle, 29.90. Now that's only 5 points. 85 or 80, is it 85 or 80? We'll call it 86 to 80. We'll call it 90, and that's only 4 points. At $20 a point, that's $80 per contract traded. Could you enter a little early? Hope to stay in a little longer? Sure. But what you have to ask yourself, even though we've identified a sweet spot or a potential window of opportunity, that doesn't necessarily mean we're going to execute on it. Because we have to factor into the equation, how high can it go before we run into an obstacle? If there's not enough room to run, and you hear Michael talk about the same thing in the morning in the trading room, in reference to the weekly trading zones, if you get a signal to go long at 3006, well, you've only got 1 point room to run before you hit what may very well be good resistance. So you just have to pass. You got to resist the urge. Your feelings and your emotions might tell you something different, but you know what to do with those. Put them in the basket, right? Okay. And then the concierge long on the ES is 29.85. So there is a current concierge trade alert. Hasn't been triggered yet. Consider being long, 29.85. That's right. There. Okay. The potential for that move is a move to 91. 6 points. $20 a point, $120 per contract traded. You have to decide if the risk, the exposure to the market is such that it warrants, is the potential profit worth the risk or worth exposing yourself to the market to the degree that it requires to implement that idea. The answer is no. Again, you have to resist. Sometimes, especially when it takes many hours for a concierge trade alert, as an example, to trigger. And by many hours, I don't know, maybe 7, 8, 10. I mean, think about it. If I put out the alert at 9 p.m. Eastern, and they're good for the whole session, the next morning at 9 a.m. Eastern, that's 12 hours. That's a pretty good span of time. A lot can happen. So somebody will tell me, they go, hey, help me. Okay. Hey, I went short at this price and it didn't work out. I go, okay. Why did you go short at that price? Well, because it was a concierge trade alert. Okay. What did the chart tell you? What do you mean? Okay, you had an alert, but what did the chart say? Because the alert was put out at 9 p.m. last night when the chart was saying one thing. It's now 9 a.m. the next day. Maybe the chart's saying something different. But I thought they were good for the entire session. They are. As long as the alert agrees with the current condition of the market. Oy vey! I just described the logic 247 alert. Get it? Okay. All right, we covered all of those, and we're running out of time. Let me pull up results so far this week for the Logic 247, of which I just spoke. Week 60, Valerie was kind enough to recap it up through noon today. 28 total alerts issued. 1 never triggered. 3 are waiting. Now, there's actually 4 that haven't triggered, but 3 we still anticipate a trigger. 1, we've already designated that. We put the little Z's by it. No trigger. They gave us 24 actionable alerts. 22 of them found their target. 2 of them have been stopped out. So far this week, 8% of actionable alerts have been stopped out. Okay, 8%. What's the average? The average is 20%. A few weeks ago, we had 0%, and then we followed that up with a week of 10%, and I told you those were not normal weeks. And then last week we had 24% stopped out. And then this week so far, 8%. But the average over the past year, since the inception of Logic 247, the average is 20% each week do get stopped out. So let's breeze through here real quick. This week's alerts. We go to work Sunday night, 6 p.m. Eastern, and we keep the pedal to the metal all the way up through Friday afternoon at 5 p.m. Eastern. These alerts come out around the clock as opportunity develops. There's last week, 24% stopped out last week. That comes after a week of 10% and the week prior to that of 0%. The average is 20. Okay, so we had gap fill trades on the indices. That's our go-to trade on Sunday night. If the market is kind enough to hand us a gap, we always go for the gap fill. So the gap fill on the S&P, the Dow, the NQ, all of those found their target. Okay, now when you read one of these, consider short 2992 to 2990. Weekly trading zone below 82/83. What that's telling you is there's an entry. Consider this for an entry. Consider this as an initial target. And consider this as where the move may end up going. You can call it a final target if you want. You can call it a trade to target. I've started to insert these in each alert because I realized that some folks weren't tracking with that whole concept. They were just happy to grab their 2 points and go. And there's nothing wrong with that. Nothing at all. But if you want more, I just want you to know that it's on the table. So on the S&P, if we just real quick look back at Sunday night, now that number was 92. 2992 to 2990. And then the weekly trading zone below was 82/83. All right. So that gap fill triggered here. So we had a Concierge Trade Alert at 91. We had a Logic 247 alert at 2992. That's 2 fingers pointing at the same price, same area. All right. Weekly trading zone below is 2979. Oh, because I published this Sunday night. Oh, please hear this out. Because I published this Sunday night, and Sunday night is when I do the new zones for the upcoming week. They go to the inbox of our traders, 6:15 a.m. Eastern Monday. I was still working off last week's zone. So the zone below was 82/83. Well, Fat Mass tells you from 92 to 82, that's 10 points. 92 to 83, that's 9 points. Did it do it? Swing low right here, 29.82 on the nose. Ding, ding. And then it backed up and did it again. And then it backed up and tried to do it again. Thank you very much. Didn't quite make it that third time. Okay? That's how that works. All right. So the Dow, similar story. NQ, similar story. Here's crude oil, similar story. This is that no trigger. That's the Z's. Thumbs up means found the target. Dow, NQ, gold, Australian dollar. Now, those were all Sunday night. Here comes Monday. This is when everybody's trading. There's gold. There's another gold. That's a long gold. That's a short gold. two-sided action. Long on the S&P, long on the Dow, long on the Russell, long on the NQ, short on crude. All of those found their target. Here comes Tuesday. Short the S&P, short the Dow, short the S&P again. This one reached the final target on the second trigger, but on the first trigger, it stopped out. In the beginning, I tried to track all and recap all the triggers from all the alerts, and it was too overwhelming. So we don't do that anymore. But Valerie was kind enough to point out that on this one, while the first trigger absolutely stopped out, red X, the second time it triggered, because important prices, important areas are almost always tested. If you go through and you look at each one of these that has a thumbs up, there's a high probability that you're going to find a corresponding trade that wasn't an alert, but that triggered at the exact same spot and potentially ran to the exact same target. Important prices, important areas are almost always tested. Based on that theory, I am confident in saying that each one of these thumbs up, if you were to track them all down, each thumbs up is probably worth at least 2 thumbs up. But again, we don't track that, we don't claim that, we're just posting whatever happens on the first trigger. All of these represent first trigger. There's a short on the Russell, short on the NQ. This is one we're still waiting on. Or at least we're waiting on it when Valerie recapped. Short on crude, S&P still waiting. Short on gold, that's done. And NQ. Okay. So that's where we stand. So for the 8% of Logic 247 alerts have stopped out this week, the average week is 20%. If you have a question, please put it in the chat box. If you don't, we're going to move on to the good word for the day. Oh, yesterday we talked about the daily chart. We looked at it for quite a while. Remember what we talked about happening? It ended up happening during the show. We didn't anticipate that. We thought it would happen maybe last night into today, but during yesterday's day session, we came down, we hit the BBC, we found good support, we bounced about 7 points. Then we continued down, found that 24% fib, spiked it, and then we're catching a nice bounce off of that. Overhead, you see this red and falling CFMA1? If price can rally that far, you should anticipate when price meets that red and falling CFMA1, good resistance, which there's a high probability the chart will end up looking like this. Leg, retrace, leg, retrace, leg. So if we end up a second time back down at this 24% fib, that will constitute a double bottom. Then the high probability becomes that we make a run at the highs, but we still have to overcome that red and falling CFM. One way of overcoming that is to go sideways for a few days so that these two, the BBC and the CFMA1, come together, flatten out, and then you get those aggravating days where you're below one day and above the next, below one day and above the next, below above. That's never a good place. That's when you should take the dog on a very long walk or make a very big sandwich. And when it's done with that nonsense and starts to move, that's when you want to be a participant. Okay? All right. Good word for the day. I pull up my notes. Some of us are guilty of burning the candle at both ends. I know I am. And while it's nice to be busy and productive and creative and all of these things, if you go beyond the normal bounds of what we're supposed to do as men, work 8 hours, rest, sleep, work, right? If you stretch, you're going to pay a price. If you're able to work a couple days around the clock because you're really passionate about something, just know that the price extracted for that is you're probably going to lose a couple days production down the road. Your body's got to rest up. Your mind's got to rest. You got to go to that place that you go when you sleep, that your batteries get recharged. Mark 6:31. Then Jesus said, let's go off by ourselves to a quiet place and rest a while. There's an ancient legend that says the Apostle John had a partridge he enjoyed feeding and tending. One day a hunter visited him and was astonished to see him playing with the bird. The hunter said, I'm surprised to see you engaged in such amusement when there are great matters related to the gospel with which you could be busy. This guy's dressing down the disciple John. John replied, do you always keep your bow bent? He's talking bow and arrow here. The hunter said, no, that would render it useless. I loosen the string unless I'm hunting. If you don't see the parallel to trading here, please book a mentoring session. I'll share it with you. The hunter said, no, that would render it useless. I loosen the string unless I'm hunting. The apostle nodded and said, me too. Hashtag me too. No hashtag. John said, me too. I unbend my mind for the same reason. Now, guess who said this? Let's get away from the crowds for a while and rest. If you've read the book, you probably know that was something that Jesus said. You know, he was the rock star of the age. I dare say he had groupies, both men and women. People followed him everywhere he went. I mean, after all, look at how much money we pay to go see somebody sing and bang on a guitar. This guy did miracles. He turned water into wine, raised the dead, healed the sick, made the blind see. I would follow. I would be a groupie. Right? So Jesus said, the most in-demand person who ever lived, said, let's get away from the crowds for a while and rest. Why did he say it? Well, the Bible says there were so many people coming and going that Jesus and his apostles didn't even have time to eat. So as in all things, Jesus becomes our example. One summer, a pastor announced he wasn't going to take a holiday, since the devil never takes a holiday. You may have heard that or read it on a bumper sticker. Some of his congregation laughed. Others thought he was very spiritual. One man went home, however, to see if Jesus had the same attitude. Now remember, this sounds good coming from your pastor in the pulpit. I'm not taking a vacation because the devil never takes a vacation. So one of the congregants goes home, gets out his Bible to find out if this was a biblical principle. He wanted to see if Jesus had the same kind of an attitude. He found, this is what the man found, he found that in Jesus' 3 years of public active ministry, there were 10 periods where he got away from the crowds. In addition to his nightly rest and his Sabbath. So in 3 years, now he not only took Sundays off, he not only got a good night's sleep every night that he could, he took 10 vacations, I don't know what else to call it, 10 breaks, 10 extended rests, in 3 years. Try telling your boss you'd like to have 10 vacations over the next 3 years. And when he says no, go, but it's in the Bible. Show him. I don't know. You probably won't win, but it's worth a shot. In 3 years of public ministry, Jesus had 10 periods where he got away from the crowds. Now that's in addition to his nightly rest and his Sabbath day rest. So the next Sunday, this fellow asked his pastor, the one who said he wasn't going to take a vacation because the devil doesn't. So this fellow goes back to church the next Sunday and asks his pastor, Pastor, are you following the devil's example or the Lord's example? Ooh, well, that hurt, right? Recreation, something we think of, vacation, weekends, days off. But let's look at that word, recreation. Break it down, and what is it saying? It says recreation. I never noticed that. Me either. Recreation is recreation. I thought it meant going to a football game. It can, if that's what recharges your batteries. Recreation is just that. Recreation, a time to renew your energy and nurture your most valuable relationships. So, you look like you could use a break today. Take one. It's important. Take time to rest. If Jesus did it, so should we. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.